Facebook CEO Mark Zuckerberg speaking on the company's earnings call moments ago. Julia Borson's in Los Angeles to tell us what he said about the quarter that sent the stock lower. Julia.
Well, Melissa, those shares moved lower as Zuckerberg made a number of warnings about business challenges facing the company and various transitions. He said that 2019 will be another year of significant investment to make the platform safe and also shift revenue to businesses both around private messaging and video. He spoke to the challenge about transitioning Facebook users from reliance on the news and advertisers from reliance on the news feed to the stories format. He said that transitions started off slower than they had hoped. He also warned about the challenge of making those user interactions with ads on stories as profitable.
I want to be upfront that even assuming that we get to where we want to go from a feed-only world to a feed plus stories world, it will take some time and our revenue growth may be slower during that period like it was while transitioning our products to mobile.
Zuckerberg also warning about their investment in video and another transition there. Take a listen.
Beyond the mission challenges of video displacing social interactions, there's also a business challenge, which is that video monetizes significantly less well per minute than people interacting in feeds. So this means that even though we've made video more community-oriented and minimized displacement of social interactions, as video grows, it will still displace some other services where we'd probably make more money.
So you're hearing a lot of warnings there about transitions and business challenges. Now, he did speak about the value of WhatsApp as they build a business around it. He talked about the potential not only for users, but for advertisers. And he said that WhatsApp is so popular because of its stronger record on privacy, because its systems are set up so that messages cannot be seen or accessed by government or bad actors. Back to that term, bad actors. But he did say that the midterms will be a big test of the privacy and the protections on the platform that they've been investing so much in. Melissa, the call is still going on now. I'm sure we'll hear more questions and perhaps more detail from CFO David Wayner about what we can expect in terms of investment dollars next year. Back over to you.
Julia, thank you. Facebook dropping to after-hour session lows, now down 4.5%. I hear what Julia said, and I hear if this is a company that's trading at 20 times next year's earnings, and we're going to have higher spending. We're going to have a slow transition as we move to stories, et cetera, in a feed-based model.
Sounds like 2Q.
Right. And revenue growth will be slower.
And their MAUs they're saturated, right? So they've got everybody on the platform that they can ever get on. Now they can't charge them as much as they used to, or they can't get the ads that they used to. That type of thing. That is a recipe for a lower stock price. I mean, we talked about the FANGs being the growth area. This does not sound like a growth stock anymore.
It's interesting. CBW has been all over
Carter
this. And Tim's been actually saying, everything that they're saying in this quarter, themes that Tim is talking about as well. I thought it wouldn't hold 150. Here we are now. I think the overshoot is you're now in the middle of the overshoot to the downside. But I think at a certain point, everything you said is accurate. I think this company gets pretty interesting. Understanding valuation is a nebulous term on valuation.
Well, there's a reason why it trades at 16 times next year. It's because it doesn't deserve a high multiple. Does this management team deserve a high multiple is certainly a question I've been asking for 6 months, even before July. And again, when Mark Zuckerberg says, I want to be up front with you, what does that imply in terms of, by deduction, what has he not been up front with? Look, executive and C-suites that don't understand the complexity of data and privacy and communicate that well and understand the dynamics of business risk, I think are getting banged around with a multiple. Facebook's not going out of business. There's 2.6 billion users. I want to be really clear about this. But what multiple does this company deserve when this management team continues to not be able to tell you what their costs are, what their costs of doing business are? This is 2 quarters in a row.
Don't know.
Okay, and the costs have gone up. They told you second quarter. Guess what? They were right. They're going up.
For more on Facebook, let's bring in Loup Ventures founder Gene Munster, who joins us now in the Fast Line. Gene, great to have you with us. What's your take so far?
It's not good, in part because we talk about the engagement going from DAU growth of 14% 3 quarters ago to 9%. But there's something bigger going on here, is that Facebook had its glory days of organic growth where it was viral usage. It didn't cost them a lot of money to build that. Now they're shifting into a phase, and this is the reason why the stock's trading down in the aftermarket. For the third consecutive quarter, they're talking about more investment than has been expected. That's a shift of a company when it becomes a growth company to a non-growth company. This is reminiscent of what happened to Yahoo as Google started to gain from search and Yahoo needed to aggressively invest. And so I think that the company is essentially scrambling to stay ahead of its changing business.
So you mentioned the third quarter in a row of spending more than it originally said, Gene. I mean, we had this debate just before we went to you that, I mean, do you think that the company really has a handle on how much it needs to spend, whether it be to stay ahead of competition and or to stay ahead of regulators, keep them off their backs?
The simple answer is no. And this is a different Facebook than a year or two ago when they would give expectations about more spending and then they would ultimately end up spending less than they said they would. We're seeing the opposite. And the reason is, you're exactly right, is the business is shifting more quickly than what they had expected. For example, a couple quarters ago, it was about users and privacy and Cambridge Analytica and trying to get that under control. Now they're talking about the increase of video on the platform and that monetizing lower, or the shift from public engagement through Facebook feed to private engagement through messaging and stories, and how that is a near-term headwind and they need to invest in that. And so it seems that there's this difficulty of the user behavior around Facebook and Instagram is changing, that's causing more investment, which means that it's open-ended as far as how long this will take for them to sort it out.
So, Gene, now when you didn't have an Amazon breathing down their neck as far as ad spend going their way towards Amazon versus Facebook, is that another thing where now Facebook is not the only gorilla in the room?
It is. And still, Facebook has incredible reach. We're talking about 2.5 billion monthly users. And so that outpaces some of these other platforms. But Google is obviously a formal competitor. And I think that this is more about a natural shift in terms of how people are communicating away from this decade period of public engagement to different forms. They mentioned on the call that in the U.S., iMessaging is the preferred private messaging platform. And they said it's unlikely that they're going to make meaningful gains on that because iMessage is embedded and ships on iPhones. And so it's those type of things, maybe a little bit, it's more about those than it's about competition that is really impacting the business.
What's your grade for the quarter, Gene?
You know, I started out at a C+ before the earnings call, and I might have to drift that to a C- given this update in terms of how the video and the messaging is impacting also the increased spending. So we're at a C- as it stands, and that may change, Melissa, throughout the call.
Yeah, we still got half an hour or so. Gene, thanks for phoning in. Appreciate it. Gene Munster with Loup Ventures. And we have seen a dramatic reversal in Facebook shares. At one point, just moments ago, the stock had been down by more than 6%. It is now hovering at the flat line. Let's get back to Julia Borson with more details from that earnings call. Julia.
Yes, some interesting commentary here from CFO David Wayner. He said that in Q4, they expect the total revenue growth rate to decelerate by mid to high single-digit percentage compared to Q3 total revenue growth rate. Revenue growth rate was 33% in the quarter. So that's when the stock dipped even more. But then it recovered. It looks like it's just recovering a bit when he gave some guidance around the expense outlook. He said they expect the full year 2018 total expenses to grow in a 50 to 55% range. That's versus the prior range of 50 to 60%. So tightening that range and bringing it down to the lower end of the range. Also saying they anticipate the full year 2018 capital expenditures to be approximately $14 to $14.5 billion compared to the prior estimate of $15 billion. So that full CapEx range is coming down below the prior estimate. So I think that's why we're seeing the stock move up just slightly, though still down a little bit less than 1%. So a lot of concern here, it seems, about those expenses, and the Q&A session is still ongoing. So we're just going to jump back on and see what else happens, Melissa.
All right. And Julia, just quickly, I mean, in terms of that prior guidance of 50 to 60% growth in CapEx for a total of $15 billion, was that changed the last quarter, the second quarter also? I mean, I'm just wondering if we should actually believe these numbers as firm guidance.
Well, I think what we're seeing here with Facebook is they're investing so much in the safety and security issue. We've seen their total employee base grow dramatically every quarter. And it seems like they're just trying to sort out how much this issue of the safety, security, the tens of thousands of people they've hired and are going to have to hire are going to really impact their bottom line. So They point to some issues in terms of revenue, because that's obviously an issue when they see the deceleration in revenue. And they say and this is really new for this quarter, is they expect more of the impression growth, that's the growth in where the ads are coming from, to come from product, services, and geographies that monetize at lower rates. So they're going to be making more money overseas from their ads, and that's just not as profitable for them. So that's really a question, sort of how much of their growth is going to come internationally, and also as they grow Stories, which is their new ad format that they're going to really be relying on for growth. It's just less profitable, especially right now. So I think that's a big factor that's going to impact revenue. And then in terms of capital expenditures and expenses, overall expenses, I think a lot of that is going to be impacted by the cost of safety and security.
Right. Julia, thanks. Julia Borson, we'll check in with her as she has more news here. Do we believe the guidance?
To believe
I mean, obviously they're going to give us guidance that they believe.
So
but do you think that it holds firm?
I don't know.
Or do they have any real understanding of what this is going to cost? Remember, this is not a community of sharing. This is about data, procuring, securing, whatever you want with data. It doesn't require a couple coders. It's major expenditure on CapEx and security. Major.
But I think the good news, if you're looking for good, people aren't fleeing Facebook. I mean, yeah, daily active users were down slightly. Monthly average down slightly, right? Total users down, but it's not like people are fleeing. People were fleeing then and say, we have a problem here, Houston, but they're not. They're spending money, I think, to try to make the experience better, which in the end of the day is probably a good thing. They don't know how much they need to spend, which is a problem. Some point, again, valuation is interesting. Maybe this is the overshoot to the downside.
Here's the problem. I don't think they're spending money to make the experience better. They're spending money to keep their finger in the dike because it's regulations. Nothing that they're spending on is going to say, hey, I can get more money. I can get more money out of advertisers. This is like maintenance of a legacy type of business. So, I mean, for me, I don't think it doesn't deserve the multiple that it's been trading at. It's no longer a growth stock in my book.
I would love to hear, and I'm not sure if there's commentary on this yet, the impact of GDPR on users in Europe and the monetization in Europe, because if the U.S. comes close to adopting anything close to a GDPR, which I don't think many people expect fully, but that could at least give us an indication as to how that might impact the U.S., the core business in the U.S.
So I get what Guy's saying. This stock came from July at 217. And then it's made a series of lower highs since basically August. So I do think at some point it's attractive right now. But if they don't know what their expenses are, they're going to be less profitable. How are we supposed to know that? So you could see it trade pretty volatile. I wouldn't be willing to step in just yet.
I just think investors have a tool in their toolbox, which is understand how executives are dealing with the complexity of governance and data risks in their business. And that means the multiple you put on is what you're willing to pay for. It's cheap for a reason. It doesn't mean the company's going out of business. It means it also doesn't need to trade at 25 or 30 times.